and welcome to today's webinar, everybody. Navigating fraud and compliance risk during times of turmoil, impacts of SVB and Signature Bank. My name is Mike Cook, and I lead our fraud commercialization and fraud investigation team here at Secure. I'll be moderating today. In the weeks since the collapse of SVB and Signature Bank, third-party and synthetic fraud attempts have rapidly spiked, especially in small business and investment platforms, according to our fraud pattern data that we pull from Secure's 1,500 plus customers, including some of the largest banks and fintechs in the market today. We've seen some new patterns following and immediately preceding the SVB bank closure that we want to take you through today. Excited to be doing that. Today, we will be taking a deeper look into those patterns and also explore how to proactively monitor fraud patterns and adjust logic to allow for seamless onboarding. Operational considerations that businesses should take to maintain a frictionless and rapid onboarding process. The importance of leveraging signals and analytics to combat synthetic fraud and attacks. So before I introduce our speakers, we want to launch a poll question. We know that this has been a very topical question in the news, and there's been a lot of discussions. And so we wanted to get the audience's sentiment on this matter. So, as SVB, the news started kind of being shared across Twitter and other places. We wanted to know, was your organization concerned about fraud following the news of SVB and Signature Bank closures? And so if you can, the poll will be presented to you. Take a moment just to answer, and we can, I believe, probably give the responses back towards the end of the webinar. Today, let me go ahead and introduce our speakers. Really excited. These are two people I work with very closely, and very happy to have on today's webinar. Deb Geister is an accomplished compliance business executive and serves as the Vice President of Commercialization for all of Secure's compliance solutions. With over 20 years of anti-money laundering and fraud expertise in the financial services markets, Deb's established herself as a well-respected subject matter expert. She frequently shares her knowledge and insights as panelist and speakers in webinars and panels like today. And she focuses on topics such as investigations, management, risk assessment, bank policy, procedures, and predictive analytics. Welcome, Deb. Very happy to have you. Also with us is Yildirim. He's a technology executive with extensive experience leading diverse teams in hyper-growth startups and established public companies. Yid has held positions in the past at eMailage, where he was Vice President of Data Science and Engineering. Also at LexisNexis as Head of Data Science and Product Innovation. He currently serves as the GM and SVP of Fraud and Risk Products and Machine Learning Platforms at Secure, where he is leading our Identity Risk Product Suite, and he is my boss, and very happy to report into him. He's got a PhD in computer science and master's in industrial engineering, and he specializes in AI-driven solutions for risk management, fraud prevention, and identity verification. I think on the agenda, we're going to talk about aftermath of SVB and Signature Bank, and just give a quick overview. There's a lot of overviews online. You guys can read that. So we'll give you kind of a Securian spin on it. He's going to go through mostly the meat of the discussion, which is the fraud analysis. What have we seen a little bit preceding the SVB attack? And then also, trends to watch, right? And then while, fraud is fraud, these fraud patterns that you're going to see, we really tried to focus on the ones that were different than what we'd seen in the past, so that we kind of tie them to SVB and some of the panic that kind of was there very quickly. But we're going to tie it to that, and then we want to be able to help you equip yourself for the future, and we'll do some Q&A towards the end, right? So, Deb, as it relates to AML and the ecosystem of financial crime, can you do us a favor and just walk us kind of through the SVB collapse, some of the follow-on application flows, and some of the things that you've seen?
Sure. And I think, in the event of bank closures and failures, this is not new. Those of us who lived through the 2008 series of events, something that got to be very commonplace. I think the interesting thing about this is if you go to the next slide, Corey, we look at a really concentrated timeline as to, just days in which this happened from the time that there's an announcement that they're going to raise additional capital, kind of sent a signal out to the market that there were maybe some capitalization issues for the bank. And a few days later, right, it was all over, but the crying, as they say. So I think the key point here, things are still evolving, still ongoing, but the Federal Reserve has stepped in and said that the money is safe for all of their depositors, right? So they're looking beyond those $250,000 FDIC limits and assuring that all of those depositors are really safe. So I think in the grand scheme of things, the other things that are interesting to note is that when we saw the collapse in 2008, there were capitalization, all through CAMEL and some of the other legislation that was put in place to make sure that our banks were solid and well capitalized. Some of those controls were removed in 2018 with the previous administration, and I think that's another thing to note, that that change may have had something to do with this, but we're still evaluating. I think the key thing, if we go to the next slide, is really the way that this happened. We've never seen a Twitter-fueled bank run like this before. So I think the critical thing is that there was some notes or some releases that SVB was raising capital. There were some venture capitalists on the street that put out signals that, hey, you may want to move your funds. And within, a very brief turnaround time, hours, right, we had the collapse of SVB. So I think in the new age of online and some of the digital technologies out there, this is kind of a first, and it's an interesting case study from that perspective. One of the things that was part of the fallout from SVB, because we had so many small business and particularly tech businesses that were being served by that particular institution, all of those organizations found themselves looking for a new home. And if we move to the next slide, it kind of lays out, here's where those shifts went. What that means is that everybody is trying to find new placement. Most of the times when you're dealing with commercial onboarding, right, you're talking weeks to months. There's a lot of flux going on right now, and a lot of people are trying to serve this community that SVB had and make sure that those accounts can be moved somewhere and serviced appropriately. That caused some things we'll talk about a little later in the way that they approach their onboarding and some of their compliance policies and practices. But what it also did that is a little more significant that Yeet and Mike are going to talk through is that it was another event where we saw market chaos. And we know that fraudsters tend to take advantage of that confusion, that chaos, and they find opportunities to hide in plain sight, right? They may pose as synthetic identities. They may create shell or front companies. They may try and take over as a small account that may have been at SVB. So there are a lot of things that we tend to see both before and after. And I think I'm going to turn it over to Mike and to Yeet to talk about what some of those things are that we've seen on the secure side.
Yep. Thanks, Deb, very much. And the poll question did come back. I'll go ahead and give a quick response on it. So we had 73% of the poll respondents that came back in the concerned bucket. Their organization was concerned. 27% said not concerned. I'll tell you where I sat. Like immediately when it happened, the first thing I was concerned about is, are we going to cover deposits over $250,000, right? If the answer would have come back, I think March 12th, right, and said no, then I would have been extremely concerned, right? But when it came back and said we're going to cover deposits, I think that helped calm down. Plus some things that the banking industry did help calm down a lot of consumers. Certainly me as an industry person. And so, you asked me beforehand, I would have said very concerned. If you asked me, after the March 12th decision, I would have said still concerned, just because, we've seen what happens when there's a change, right, in any kind of magnitude, honestly, in this industry, and fraudsters do try and attack it. So If you do go to the next slide, Yeat's going to take some time now. He's going to take you through a fraud analysis. He'll talk to you about a little bit about our technology, kind of in the reason we can do the analysis in real time, and something we jumped on right immediately once we heard, what was happening. He'll take you through some high level things, and he's going to take you through some very detailed specifics of what we're finding, not just proceeding right and during the collapse, but also even as early as last couple of days. So. Why don't you take it?
Thank you, Mike. So there are a few things that I would like to touch upon here. First of all, from a methodology-wise, I would like to give an overview of how we are looking at things generally and how we were able to get notified about some of the changes in behavior immediately. So we didn't really take a huge effort into really digging deeper into the patterns manually. These interesting things, systems were built in the background, so we were able to highlight and figure out some of the patterns that's happening. And we were able to quickly turn around and take action accordingly and inform our customers as well. I would like to piggyback on something Mike has said before I jump into the specifics of the methodology. I was very concerned when I first got the news that, and I think these patterns that we're going to see is very important to really understand and digest and learn from. But at the same time, it could have been a completely different picture if FDIC decided not to cover the losses. So we were very initially concerned, and we were on top. We are still on top of things, but some of the things that you're going to see are going to be less drastic than it could have been. But at the same time, it will show us some of the important attack vectors to be conscious about, and also some of the activities that we need to constantly monitor. So we have built systems at Secure looking at two different things. Of course, we have monitors around volume trends, age demographics, how the PII population rates are happening in our applications, and any non-man changes that might be coming in, KYC trends, pass rates around it, reason codes of all of our models, why our models are deciding one way or another, model distributions, common fraud patterns. But we're not just looking at these things from a static perspective. We also have data-driven monitors and alerts in real time. So we actually get so many different intelligence from it. Okay, there might be a fraud attack happening or an increase in fraud scores. Is it related to a particular phone cluster in a phone carrier? Is there an ISP that we need to be worried about? How about the IP geolocation? Are we seeing some state actors getting involved? And all these type of anomaly detectors tagged together, we were able to get down to an analysis pretty fast, and we were able to alert our customers about what they expect accordingly. So in the next slide, we're going to jump into some of the generic patterns that we have seen overall. But one thing that I would like to note is not all our customers, not all of our industries that we serve, we have seen the same things. I think we have seen so many different behaviors between banks, between small businesses and investment, and other industries we serve. And these patterns and how fraudsters responded and how legitimate customers responded to the SVB news was quite different. But there was one thing that was common between all these type of customers. It was seeing applications, particularly high-risk applications coming from OFAC-sanctioned countries. And we have been seeing these type of patterns, and this is a random sample from all of our client base. We see high-risk transactions, high-risk applications coming through OFAC-sanctioned countries from an IP proxy perspective constantly. And these might be applicants really that is supposed to do business in the United States financial ecosystem. Some of them might be tagging as higher risk, although there might be legitimate use with it, but generally we have seen elevated risk. And we have also seen fraud attacks trying to infiltrate into the financial system on an ongoing basis. But one thing that we have noticed is once the news or indications about Silicon Valley Bank collapse coming in, we have seen a huge spike from the IPs that is coming from the OFAC sanctioned countries, alongside with some other risk factors. And the other risk factors changed as well. And you're going to see an aftershock as well in the upcoming week. And usually what happens is fraudsters come in, and fraudsters try to scale up their operations quite rapidly. So these are not the new fraudsters. These are still the same actors that is attacking your systems. But once turmoil hits, they are ready with their tools, especially at this day of age. It's so easy to automate the attacks, and they just try to hit and exploit the systems at a larger scale. So we have seen a spike, and we have seen, thanks to a lot of great tools that our customers have been using, including our solutions, we have seen these attempted fraud attempts being deflected by these defenses. But they always come back and try to see if these defenses are down. So that's the second peak that you're seeing, testing systems and seeing if there are additional weaknesses that might be introduced in the system. So this was the overall trend that we have seen everywhere. So I think the conclusion that we have gotten is it's really important to really understand if you're getting applications from OFAC-sanctioned countries, and really having a holistic view into seeing, is this a legitimate increase in patterns, or is this a scaled up fraud operation? And the other indications that we have seen has shown it actually is a coordinated attack. And in the next slide, we are going to get into a little bit more specifics of what kind of fraud events have we seen in specific sectors, specific industries. So the overall fraud rate is something that is usually not in percentage points, that is usually in basis points. And when we think about our whole customer base, we track synthetic fraud that could be manipulated synthetics, it could be fabricated synthetics alike. We usually see a very steady 50 basis points of synthetic fraudsters hiding in investment accounts and small business banking accounts. And these folks might not be always creating financial loss. They might sometimes be nefarious actors trying to get into the system, become money mules, and also commit other financial crimes, and they are not always detectable that easily. So we have seen fraudsters try to take advantage of these situations when there's a turmoil like SVB and try to get into the system at a higher rate. So we have seen two specific attacks related to synthetic identities. We have seen the synthetic fraud attempts getting almost tripled at times and usually doubled. On March 12th, it peaked the first time. We have seen the elevated risk starting from March 9th. We have seen the peak on March 12th, and it died down over time. And we have seen a second spike, a very similar attack from the same actors trying to create synthetic identities and deposit accounts in investment and small banking sectors, subsequently again on March 21st. And it's important to note that if with good systems and a holistic view of really trying to understand where these attacks might be coming in, these were not that sophisticated, and we were able to easily point out and explain the reasoning why these might be synthetics. And we are going to be diving down into some of those patterns that we have seen in the subsequent slides. But in the next slide, I would like to talk about also a very specific attack and at a larger scale attack for third-party risk. So just like we have seen attacks with synthetic identities and attempts about creating accounts, investment and small business banking, especially products around deposit and also credit alike, we have seen a huge spike in risk in the applications, especially attempted third-party fraud events. And you're going to see we have been trending around a 4% attempted fraud rate building up to the SVB collapse. And we have started seeing elevated risk as soon as March 7th. It didn't start March 9th, it didn't start March 14th or any other time. Even events preceding this, and I think it was a good analogy, or it was a good anecdote from Mike and Deb, sentiment in Twitter and information and word of mouth going around about SVB, fraudsters also catch those things. And fraudsters try to come and exploit any kind of turmoil as soon as they hear about it. I mean, we have seen these type of things happen previously. Usual customers get alerted to these things and respond more reactively than proactively. But fraudsters are usually monitoring all sorts of news streams and any kind of sentiment changes, and they start their attacks before we see a huge spike in volumes or legitimate applications. And in this scenario, we have seen the applications, fraudulent attempts of applications for investment and small business banking, peaking at 15% of all the transactions that we have seen in these sectors were attempted fraud events. And it's important to note that it has calmed down after 15th. And we have seen a steady decrease of risk, almost trending down to 4% and 3.5% over time for third-party fraud risk particularly. And in the next slide, just like I promised, we're going to deep dive in one of the fraud patterns that we have seen both in synthetic account creation and also third-party account creation. So here in the y-axis, you're going to see a firing rate of each reason codes. Basically, when these reason codes fire, it means that we have seen some risk signals that is affecting our model scores to go up. And how often this happens is an indication and a correlated variable to how our scores are calculated. And we have several risk factors here in different colors. So phone being associated with a mobile virtual network operator is the blue one. We have also an orange about non-fixed voice over IP. We have a phone not actively used phone numbers being shown. We have IP being a known proxy address. It can be a residential proxy or a corporate proxy. We have seen IP address originated from an OFAC sanctioned country, and also email associated with a high-risk top-level domain. So you're going to see, especially after March 14th, these attack vectors kind of become stable. But even before, we have seen two different attacks. The first attack happened on March 5th for the investment platforms. And there's not enough evidence in our hands to tie these attacks with the Silicon Valley Bank or any kind of preceding word of mouth particularly. But we have seen same actors coming in and try to exploit systems quite heavily on when the Silicon Valley Bank collapse happened. So we have evidence to say these are very similar actors coming from similar domains, similar geolocations, and they have three characteristics that is dominant. They create voice over IP accounts quite rapidly. They are using phone numbers that are not actively used if they are not coming through voice over IPs. They are coming through either proxy addresses, proxy IPs, or they are coming from IPs that is associated with OFAC sanctioned countries. And both of these attacks pointed to the same or similar actors, and they have scaled up their operations quite heavily. In the peak, we have seen one fraudulent application every 3 minutes, which was a stark finding for us, because it is not only that you're able to prevent those fraud attacks, that is amazing that you could, but at the same time, if your operations are not streamlined and if they're not automated, it creates a huge operational burden on your fraud teams. Although you are able to step these fraud attacks up, it's so important to make sure that the operations are smooth and you're able to fight with these fraudsters at the same or better operational efficiency. And in the next slide, we're going to take a look at another dimension that we're not showing here regarding email addresses.
Yeah, indeed. Hey, if it's okay, I wanted to add in.
Please.
So I spent some time doing the analysis with the analytics guys, and he was very focused on, hey, what are the new trends that we're seeing that we hadn't seen prior to SVB? So the trends that he's covering, I don't know if you went into too much detail about it, but these really are trends that we think are tied to SVB, and not just generic trends that we constantly see, right? One of the things we keep talking about is fraud, right? So you're always going to see this similar patterns over and over and over. But this trend and then a couple others that he's going to talk about are trends that we really did see, and we feel like we can tie these to SVB specifically.
That is correct. That is correct. And thank you for that. One distinction I would like to make sure that I clarify, there are certain attacks and certain attack vectors we see specific to SVB. And we see some operations being scaled up after SVB from the same actors, but they try to take advantage of SVB collapse and any kind of turmoil to scale up their operations. Attack vectors change, actors sometimes change, sometimes same actors scale it up. So we have seen several so interesting patterns that is sustained, but the analysis mostly focuses on SVB-related fraud attacks that we are seeing, not the regular ones. And thank you for jumping in, Mike. So switching gears to some of the larger banks in the United States banking sector, unlike the volumes go up, and we're not showing the volumes here as much, but we have seen a huge increase in especially deposit account and small business deposit account volumes for big banks. However, we have not seen an increase in risk in our systems. So most of the new applications coming in, we're tracking in a similar risk. Besides the fraud attacks that were apparent, the general trend that we have seen with top banks and larger banks, volume went up, but the risk has stayed constant in the first days of the SVB collapse. However, we have seen things starting to change after FDIC cleared that the deposits and deposits over 250K is going to be also covered. So here we are seeing a clear increase in different types of risk for deposit accounts, and the increase in risk as a trend has been continuing over time. So it's interesting to see that in different sectors, we have seen very immediate attacks, we have seen sustained attacks, we have seen things calm down. But also, very differently, we are seeing in top banks and larger banks, immediately we have not seen an increased risk, but over time, we are seeing more more higher risk email domains opening accounts, and it still continues. We are seeing more voice over IP applications coming to these banks. We are seeing IPs from proxies coming to these banks. And this risk and this attack vector doesn't seem to be subsiding anytime soon, and the trend is going up. So this is a good signal for me to say, don't let your guard down. These attacks come in so many different temporal flavors, and it might be a good sign for you to really see who the fraud actors that is targeting you, what their strategies might be, and always tighten up those different attack vectors and your workflows according to what you see. And big banks in this case, we are seeing elevated risk over time, not as spiky as investment and small business banking, but slow and steady increase in risk over time. In the large banks, one specific attack vector, unlike the other attack vectors that I have shown you in the previous slide, popped up very spiky. So when the initial events and initial word of mouth hit the market, and when the bank collapse happened, we have seen a huge increase in newly created emails opening accounts. And newly created emails are usually riskier, but sometimes it is not as risky as we think if there is a good reason for opening up these new email addresses. But in this case, we have seen a fraud attack for large banks, where a lot of actors, not very sophisticated actors, they try to open up new bank accounts with newly created email addresses, but that attack very quickly died down after March 12th. So the sustained attack is much more holistic and much more complicated, with a lot of different attack vectors being shown here. But we have seen an initial spike in large banks with newly created emails in the past, which is stable at the moment. So I'll be switching over to Mike to really talk about, okay, we are seeing all these great, interesting trends. What can we do about those? What does it mean for my company? So It's all yours, Mike.
Thanks, Yi. Thanks for all that detail. If anybody has questions, please feel free to pop them into the chat, and we can answer any ones that we see and that we can respond to. But yeah, so that's the background with Yi. it's really great, very specific analysis talking about which industries you should be concerned about or not, right? And then also what are the kinds of features and things you should be kind of paying attention to. Again, the fraud is the conversation that we've had over the last couple of days, and we're going to continue to see fraud spikes and changes and patterns, right? I think this will probably be the last thing that we can tie to SVB, just because the further away you get, the harder it is to tie something to an event. But we wanted to not only share with you what we're seeing, but also talk with you about, hey, here's some of the things you should really be paying attention to, really for the long run. But honestly, just, if you're in one of these markets that you was talking about where you should be a little bit more concerned, really start to pay a little bit more attention to that. And so if we go to the next slide, you cover some of the fraud things, then Deb, if you can cover some compliance stuff. And again, if you have questions, pop them into the chat.
For sure, Mike. Thank you very much. So as we covered so many different fraud patterns, we have seen different spikes of third-party fraud attacks and synthetic fraud attacks pop up, and they don't seem to be going away. So we are going to be seeing most likely aftershocks after SVB. Fraudsters keep testing and try to get into the financial system. So that is why it's important to strengthen the fraud controls for deposit accounts and credit accounts alike. Especially if you don't do that, SVB turmoil has been a good catalyst for fraudsters to try to take advantage. But any kind of other changes in the market, any kind of other turmoil that might happen, they are ready to scale up their attacks. So you need to be ready to respond dynamically and holistically to any attacks that might be happening. So it's important to also take a look at potential account takeover attacks. I think we have seen several attack vectors being tested and very well remedied. But it's important to have passive monitoring on emails, phones, address changes, any non-monetary changes to make sure any of the account takeovers attacks might happen, especially in a turmoil. They try to take advantage of the chaos and they try to make changes and blend in. Especially when we think about a lot of authorized users try to move money around and they try to change a lot of details in the bank accounts. We have seen an increase on activity. Not necessarily they were account takeovers, but it was very important to distinguish correct non-mon changes versus fraudulent ones. And finally, one important one to note is it is not all about detection. It's also very operational. So in these times, and especially after SVB, we have seen a huge increase in volume. And although the risk signals are there for you to flag these, it's important automating the step ups in this case, so that operationally you're able to respond and you're able to not increase the friction or decrease customer satisfaction for your good customers. And having said all these, I'll switch over to Deb to cover some strategies for compliance. Thank you.
Sure. And I think it's really important to point out a lot of good things that we can do on the fraud side, but I assume you're well connected with your compliance partners. It's really important to be able to make sure that they're along on the journey. They can really help you with clear documentation on any risk, response, and remediation efforts that you're performing in response to market turmoil like this, right? So an example is we're trying to serve customers very quickly. We certainly, a lot of this turmoil hit mid-month when a lot of companies were trying to do payroll cycle, right? So they have to get those funds out. We have to serve those customers really quickly. So how do we make sure that we do that, but we still have to make sure we follow our policies and our processes? Because if we shortcut the current process, right, without clear documentation, clear timelines and justification, right, we're gonna find ourselves down the road when we get into the exam cycles in a challenging position. So make sure that you're leveraging current policies, but note any adjustments that are required as part of your risk response in that capacity. Prepare your staff for those acceptable changes. What can we skip? What can we push back a little bit on? And what can't we, right? Where are those lines in the sand? And the same thing is true on the fraud monitoring side. At what point in time does it now become an issue? And I think you pointed out some nice spikes that we saw, but what if those are gradual inclines? Where does it become a problem, right? So within your policies, make sure that you've identified when do we respond? What do those spikes need to look like for us to be able to take action, and how do we put those into our overall policies and procedures? Any risk condition or any event should be updated. The board needs to know about any risk changes or adjustment because they have to be prepared. On their side, they're ultimately the ones that have to answer to any adjustments in risk, a risk position. And finally, go back and do a QC review. So what can we learn from what we saw in these fraud patterns? What can we take away and incorporate into our policy going forward? I think that's a really valuable tool to be able to help you mitigate going forward, to learn what you can do to further protect your organization. Also, I think the one thing I'd be remiss in saying is that we do anticipate, some direct and indirect regulatory guidance around synthetic fraud. We know it's been a very strong focus area for FinCEN. And if I can put in a little plug, later this month, or later next month rather, we're gonna have a speaker from FinCEN to talk about some of the initiatives going on at FinCEN. So watch for that event. But CFPB is also looking at synthetic in regard to P2P payments and some of those things that are happening. So there's a lot of regulatory turmoil, a lot of flux right now, right, for the banking community. So make sure that you're kind of plugged in, tuned in, and can respond to those things in your policies and your procedures. All right. So, we talk a lot about synthetic. I think synthetic is something that is a big focus area for us here at Socure. It's certainly a big focus in the regulatory community. And synthetic identities overall, you may not see a direct loss from a synthetic, but they certainly put us in a lot of risk as organizations, because they are strongly used for money laundering activity and all kinds of things within the financial crime ecosystem. So I think synthetic identities are a key challenge. They've been a primary focus for us, and I think it's something that Mike and Yeet and the team have really put a lot of effort into. And we do have an initiative, Mike, that I'd love for you to walk through as to how this affects us here at Socure and what we're trying to do to really help in this regard.
Yeah, we made thanks, Deb. We made an announcement, maybe a month ago, that we wanted to root out 100,000 money mules, and we're going to go call them synthetic identities, right? But we wanted to root out 100,000 of these from the U.S. financial system today that are operating, right? So we're working with our customers to do some batch portfolio scrubs, some analytics to basically say, hey, let's find these money mules that are operating in your environment, right? Number one, they're terrible for the U.S. financial system. Money mules are terrible for consumers, right? They do all kinds of horrid things. But there's a lot. I mean, 1 to 3% we see of accounts that are in deposit accounts, identities in deposit accounts are synthetic identities, right? So that's quite a bit, and we're not even adding in third-party fraud, account takeover, for second-party fraud for money mules, right? So it is a sizable problem, and we're working with our customers. We hope, if you're here and you're worried about money mules in your account, you want to find a way to cut those out, let us know. But we really are, as a company, focused, and we're putting our butt on the line here to tell people that this is a goal that we're going to try and reach, working with our customers, working with the industry, and working with government to root these money mules out of the system. So thanks, Deb. Appreciate that. I think we're going to go to Q&A here in a bit, but before we do that, we wanted to ask this question: was this webinar helpful, and would you be interested in future webinars with updated analysis? And for us, right, at Socure, before we put the first blog out, we thought about it, and we said, hey, we don't want to create panic here, right? And this was very early on, and we decided a lot of it because many of us, lived through the horrors of 2008 and 2009, and still have a PTSD from those days. And so we said, hey, let's get out with a message that says, we're going to start to pay attention to what's happening post SVB, Signature Bank, and see if we can help, right, the industry. We're very glad to see that deposits recovered, because we think that made very comfortable, more of a comfortable thing for consumers, less chaos, right? So We're happy that we didn't see quite the level of fraud that we thought we might, and we hope that continues. So we do have a couple questions here. One, let me read it first, and this will probably be for you, I think. So the question is, should companies expect residual fraud attacks in the weeks and months to come?
Absolutely, Mike. I believe fraud attacks are constant and they come in waves, but especially with the pattern that we have seen, elevated gradual risk combined with spikes, I think the companies should be ready for any aftershocks or new fraud attacks to come. And I think fraud attacks change quite heavily, especially we are going to be seeing with the democratization of different generative AI technology. We are going to see more and more interesting ones, and we are going to be having fun catching those fraudsters as well.
Great. And then number two question, probably for you too. And I think we have a question for one more, or time for one more. Deb, if you want to follow on to this one, please do. But the second question, have you seen attacks in non-deposit accounts? Because we talked about a lot of on accounts, right? So like new applications for credit card. Can you respond to that? And that's probably for you, Yi.
Yes, we have seen them. That we have seen attacks, and we have seen elevated risk on those accounts as well. It's not as clear if they were tied more to the SVB or if it was a temporal spike. That's why we didn't highlight today. But we are seeing elevated risk in all sorts of different activities. That includes credit applications. Deb, what have you seen?
Yeah, I think your first attack is usually, especially when you're talking small business, they have to have a DDA account first. So that's usually your first entry point that we're going to start to see those synthetics, but then you're going to see escalation of those types of applications and other products that they try to manage their way into, right, to be able to get embedded in the institution.
Great, thank you. And then we did get one more last question here that we wanted to respond to. This will be for you. Do all of Secure products APIs look for synthetic identities?
That's a good question. Yes and no. Through ID Plus, we have a specific synthetic module that is holistically looking at synthetic identity. If you would like to weed out synthetics, I would recommend calling that module. But it's not the only thing. So when we think about our models and our risk scores and the target variables that we are training those models on, it does catch up. It does catch some of the signals the synthetics emit. So you would be seeing elevated risk in certain fraud products and also KYC alike. But if you would like to weed out synthetics, I strongly recommend integrating with our synthetic product specifically.
Awesome, thank you. Hey, and with that, we're going to wrap up. We do really appreciate the audience today. Thank you very much. This is actually the largest audience we've had for an internal Secure presentation, which just talks about the industry and how interested they are in that. I'm sure, Deb, your upcoming webinar is going to be bigger than this one. So if you guys can participate, Vincent's a pretty good guest, right, that you guys have there. And again, we appreciate your time. We'll continue to monitor. If we may not do another webinar, but we'll certainly, if we see any fraud attacks that we want the industry to know about, we'll send out quick blogs. So please pay attention to the blogs come out of Secure, or we generally put them on LinkedIn. And again, Deb, always great to get to work with the extra. And I hope everybody has a great day.